After putting in a 16-year high of 5% on October 18th, U.S. 10-year yields have been in a relative free fall to a low of 4.39% on November 27th. Now, the most common explanation for the move is that inflation is in retreat. Now, the latest round of CPI data, released on November 14th, appeared to confirm the belief, as the 3.2% year-over-year increase was lower than expected. Interestingly, though, expectations for short-end rate moves have stayed relatively anchored, bolstering the belief that the Fed's intent is to push back any possible rate cuts in the near term until inflation is solidly defeated, which may allow longer-end rates the ability to gravitate lower. Now, there are some key data points in the coming days that may shed more light on the rate picture, with GDP on November 29th and PCE, which is said to be the Fed's preferred inflation measure, on November 30th. Now, if PCE surprises to the upside, it could quickly change the rate narrative. The question will be whether the market interprets the news to mean that long-end rates need to move higher in response to persistent inflation, or instead, is it possible that it would open the door to more aggressive short-end Fed hikes, which the market feels are excessive and ultimately could drive 10-year yields lower. Now, if a trader believes that 10-year yields could bounce back from here, they could express that by buying the December micro 10-year Treasury yield futures contract at 4.36 and target a move to the November 10th high of 4.66. Now, a stop for this trade could be placed below at 4.16. This trade could make $300 if the target is reached and risks $200 if you're stopped out at your level. Now, if a trader believes that yields will move lower, they could express that by selling the December micro 10-year Treasury yield futures contract at 4.36 and target a move to the psychological level of 4.00. Now, a stop for this trade could be placed above at 4.56. This trade can make $360 if the target is reached and risks $200 if you're stopped out of your level.